Good morning, everybody. Voyager Digital just files for Chapter 11 protection in the Southern District of New York City courts. There's a couple of different bankruptcies that there are. There's a Chapter 7 and Chapter 11. Chapter 7 is straight liquidation. We're going out of business. It is what it is. While a Chapter 11 is considered restructuring bankruptcy. They filed this bankruptcy approximately 2 weeks after stopping all withdrawals and approximately a week and a half or so after Sam Bankman-Fried came out and gave them a revolving credit line worth nearly $500 million. I'm going to go over the court filing in just a moment, but they listed over 100,000 different creditors that they owe money to, and the top creditor that they owe money to is Sam Bankman-Fried. They owe that $75 million to. Now, the revolving credit line says that you could only take out $75 million at a time in any 30-day given period. That was probably one of the smartest moves he can do to limit his exposure, and now he's only owed $75 million. However, if he opened up the entire revolving credit line, maybe they would have been able to get out of this position. In the filing, Voyager Digital says this was very necessary in order to try to move forward and try to figure things out. I'm going to go over the filing in just a moment to show you what it actually looks like, but it's very important to understand, and there's going to be a lot of people out there that are going to say, oh, they're bankrupt, they're bankrupt. I'm not saying that this is all Gucci. I'm not saying that this is good. I'm not saying it's all flowers, and I'm not saying it's all rainbows. And I am saying that this is a very dire situation and very, very bad. I am going to tell you something that a lot of people on YouTube are not going to say because they usually don't know about things like that. Filing Chapter 11 bankruptcy does not necessarily mean that you're going to go out of business. It means that you are going to restructure your company. There's a couple of things that you're going to do in order to restructure your company. Before I tell you these things, I'm not a professional, I'm not an attorney, I'm not a financial advisor, I'm just an entertainer and educator at best. I do own some shares of Voyager Digital. I bought them at the super, super low price of this going out of business sale. And that's what I'm looking at this as, a going out of business sale. And you don't know if they're going to get out of this or not, and you get a fantastic deal. And for anybody that's going to say, Adam, you have no idea what you're talking about, just look at Hertz Rental Car. Hertz Rental Car files for Chapter 11 bankruptcy, and they get out of Chapter 11 bankruptcy stronger than ever. And Hertz Rental Car is not the only company that files for Chapter 11 bankruptcy. Airlines do it. Cruise lines do it, and other huge companies that you know about, that you speak about every single day. Now, it doesn't necessarily mean you're going to get out of this bankruptcy, but it does mean that companies have successfully filed for Chapter 11 bankruptcy due to economic conditions, and they were able to restructure, reduce costs, and get out of this unscathed, and in times become bigger, stronger, and better companies than they were before. Now, of course, I'm saying this just to give everybody hope, but I'm not just flapping words here. It's a fact. You could double check me. Hertz filed for bankruptcy. American Airlines filed for bankruptcy, and they came out of this unscathed. Now, there's many other companies that file for Chapter 11 bankruptcy, and they cannot get out of this. I'm going to read you the actual court order right now, and then I'm going to go on their Twitter, and then I'm going to tell you what restructuring entails and how possibly they could get out of this. This is what the Chapter 11 filed bankruptcy form actually looks like. On the top left-hand side, it says Southern District, New York. On the right-hand side, it says filing for Chapter 11. Filing for Chapter 11 is better than filing for Chapter 7. It means that there is still some hope, and I stress the word some. And then it gives you the name, it gives you their EIN number right here, it gives you their debtor address, so on and so forth. What you really want to look at is a couple of boxes. If you go down right here, estimated number of creditors. They owe money to over 100,000 people. 100,000 people. Number 13, debtor's estimation of available funds. Funds will be available for distribution to unsecured creditors. Estimated assets, 1 billion to 10 billion, while estimated liabilities is also between the 1 billion to 10 billion. If you go a little bit lower to page 5, if I'm not mistaken, it's going to name all of Voyager Digital and their AKAs. Voyager Digital Holdings Incorporated, Voyager Digital LLC, Voyager Digital Ltd. If you go a little bit lower, it's going to actually show you the creditors. The first creditor, as you see, is Almeida Research Ltd. That is owned by Sam Bankman-Fried. On the right-hand side, it says it's an unsecured party loan, and then it says that they owe him $75 million. After that, these are going to be the next 50 or so creditors that they owe the most money to. These are customers, and this is what people hold. So one customer holds 9.7 million, 7.8 million, 5 million, 3.3 million, 3.3 million, 3 million, 2 million, 2 million. So these are all the creditors that I believe hold like over $1 million. But if you go all the way to the bottom, you're going to see a very interesting name that's going to say a vendor, Google LLC. And their email is collections@google.com. They owe Google nearly $1 million. That's probably for AdSense. That's probably for advertisement on people's YouTube channels. That's probably for cloud services, so on and so forth. And this is the tweet from Voyager. It says, Voyager, today we began a voluntary financial restructuring process to protect assets on the platform, maximize value for all stakeholders, especially for customers, and emerge as a stronger company. Voyager will continue operating throughout. If you click on this, this is what they're saying right here. That's why I wanted you to see what the actual Chapter 11 bankruptcy form is. I could have just read an article first. The point is, a lot of these YouTube gurus, a lot of these people that are screaming, and I'm getting into my comments, oh, bankruptcy, bankruptcy. They don't know their head from their ass, and they will not know the difference between several types of bankruptcies, and they cannot cite any companies that they use every single day today. They would not know that they actually went through Chapter 11 bankruptcy, and they came out stronger than they were before. I'm not saying that there's no risk here, and I'm not saying that they're gonna get out of this. All I'm saying is there is hope that they're gonna get out of this, and because they're doing this so fast, I feel like that's a positive thing. They're like, yeah, listen, we have a freaking problem. Let's restructure this shit, and let's get the heck out of here and try to move forward. That's what I'm thinking is happening. Again, I'm not saying that we're out of the woods. I'm just saying that there is some bullish sentiment in this very bearish situation. And I quote, the comprehensive reorganization is the best way to protect assets on the platform and maximize value for all stakeholders, including customers. Voyager's platform was built to empower investors by providing access to crypto assets, trading with simplicity, speed, liquidity, and transparency. While I strongly believe in this future and the prolonged volatility and contagion in the crypto markets over the past few months, and the default of Three Arrows Capital on a loan to the company subsidiary, Voyager Digital LLC, requires us to take deliberate decisions and actions now. Chapter 11 process provides an efficient and equitable mechanism to maximize recovery. The proposed plan of reorganization would, upon implementation, resume account access and return value to customers. Let me read that again. Upon implementation, resume account access and return value to customers. You just don't know how much value they're going to give you, and I'm going to get into this in just a moment. Under this plan, which is subject to change given ongoing discussions with other parties and requires court approval, customers with crypto in their accounts will receive and exchange a combination of crypto in their account, proceeds from 3AC recovery, common shares in the newly reorganized company, and Voyager tokens. The plan contemplates an opportunity for customers to elect the proportion of common equity and crypto they will receive, subject to certain maximized thresholds. Guys, before I go any further, if you've been watching my other videos about Celsius, Simon Dixon proposed 3 plans. One of the plans was a restructuring, a financial restructuring, where he says that there was 2 exchanges, Mt. Gox, that's still using traditional finance methods and was not out of the situation of their bankruptcy or of their, financial turmoil 8.5 years later. The second one was Bitfinex, and they chose to do a financial restructuring where it sounds very similar to what they're doing right now, where they gave consolidated debt. So if somebody owed $1, for example, they gave you a token worth 30 cents, and you could either sell that token or exchange that token for equity in the company, or you could just hold on to that token in the future or buy more tokens. And depending on what's going to happen in the future, we can either recover our funds, which they're just recovering $190 million worth of Bitcoin, or you could just sell at 30 cents on the dollar. It seems very much this is similar to what they're going to do. I don't know the values. I don't know the whole detail, but it seems that's what they're trying to do because they're saying that they're going to give you equity in the company. What does that mean? That means there's going to be huge dilution in the share prices. Let's keep going. Consumers with USD deposits in their account will receive access to those funds after a reconciliation and fraud prevention process is complete with Metropolitan Commercial Bank. The company continues to evaluate all strategic alternatives to maximize value for stakeholders. So right now, there's essentially three parties. There's the customers, right? The customers, the people that actually hold funds on the actual exchange. There's people that invested in Voyager Digital who own the actual shares of Voyager Digital, like me. And then there's people that own Voyager token, for example, and people that are owed money from Voyager Digital. So there's four. They have to account for all of those four because all four of those are owed something in some way, shape, or form. Probably the Voyager Digital tokens to a much lesser extent because that's a DeFi product. The company has over $110 million in cash and owned crypto assets on hand, which will provide liquidity to support day-to-day operations during the Chapter 11 process, in addition to more than $350 million of cash held in for the benefit of customers' account at Metropolitan Commercial Bank. Voyager also has approximately $1.3 billion of crypto assets on this platform, plus claims against Three Arrows Capital of more than $650 million. They're really banking that they're going to get part of that $650 million back in the future and be able to distribute that into the company to show them some financial support in the future. I believe that they're trying to do some bankruptcy here, come out of this really strong to show people, hey, it is what it is, but we did everything possible to make sure that we fix the problem. Let's move forward. That's their thinking, in my opinion. And they're looking about what's happening right now with Celsius and some of the other platforms. And they're like, listen, let's do this ASAP as soon as possible to show strength instead of weakness. I'm not sure saying it's good. I'm not saying it's bad. I'm just giving you the 411. As part of the reorganization process, the company will file customary first-day motions to allow it to maintain operations in ordinary course. Voyager intends to pay its employees in the usual manner and continue their primary benefits and certain customers' programs without distribution. The company expects to receive court approval for all these routine requests. Trading deposits, withdrawals, and loyalty rewards on the Voyager platform remain temporarily suspended. Guys, when you're going through Chapter 11 bankruptcy, you're looking essentially for 5 things. Or at least I would be looking. Number 1, you're looking to reduce costs. You're looking to reduce overhead. You're looking to close out debt. You're looking for ways to make people whole. You're looking for reorganization of staff and reducing staff overhead. So you're probably going to be firing a lot of people. You're also looking for somebody from the outside in, or maybe some of your inside shareholders, to bring some value, to bring some equity into your company. They're looking for somebody who's going to invest in Voyager Digital. There's probably going to be a huge dilution of share price right now. So if Voyager does somehow get out of this, the share prices they're going to have right now, if they are going to do what I'm reading right here, they're going to dilute the share prices and they're going to distribute those share prices to a lot of people that have money on Voyager Digital. So like, let's say you have $1,000 on Voyager Digital. And again, I'm not saying that's what they're going to do. I'm just saying this is what I'm understanding from reading this. They're going to say, hey, we have $500 worth. Here's your $500, and we're going to give you $500 worth of equity in the company. I'm just giving you a very basic example, and I'm just using some numbers that don't mean anything. This is an article about Hertz. Hertz exits Chapter 11 as a much stronger company. Successfully restructuring provides that the company would increase liquidity, a significantly deleveraged balance sheet, and a right-sized, efficient operation. Does that seem like something that I just said? Remember how I said, hey, this is how I would restructure? Does that seem like it? Hertz poised to capitalize on travel rebound and long-term growth opportunities. Does that also sound like something similar to what I've been saying about the crypto market? If crypto can recover, if Bitcoin hits 30,000, 40,000, 50,000, they're going to be in good shape. They are buying themselves some time right now with this Chapter 11 bankruptcy. There are tons of other companies that file Chapter 11 bankruptcy all the time. Chapter 11 bankruptcy allows you to go through the motions, allows you to keep your business afloat while you're restructuring. That's the point of Chapter 11 restructuring, Chapter 11 bankruptcy filing, in my personal opinion, and that's what I think is happening right now for Voyager. Again, I'm going to say it as clearly as I possibly can. I don't think this will be easy, but I also am telling you this does not necessarily mean that they're going out of business. And if you dig a little deeper, like I just did, you can clearly see what they're trying to do. I do have shares of Voyager Digital. I bought shares of Voyager Digital when it was down like 97%, something like this. So I'm not really in the red. I'm approximately even, maybe a little lower, maybe a little higher. And I did buy as the share prices went a little bit lower in these dips. If the share price today drops tremendously, I'm probably gonna put in a little bit more for this large dip. Why? When I'm investing in Voyager right now, it's ultra high risk, ultra high rewards. Guys, it's crazy and I feel for you guys. It's very, very scary. It's gonna take a while for people to come back to these central exchanges. It's gonna take a while for people to get back to these central exchange financing platforms. It's gonna take a while for a lot of trust to come back in the crypto community. Hopefully all of these crazy lending platforms are gonna stop, cease, and don't do that no more. Don't offer these crazy rates, but then if you don't offer these crazy rates, how are you gonna stay in business, right? It's a pretty crazy situation. Guys, thank you so much. Please subscribe to the channel if you like information like this. I'm sure I'm the only YouTuber who's breaking it down exactly like this. And if you let me know in the comments, do you subscribe? I'm gonna make sure to say thank you and in return, respond to your comment and say thank you for subscribing. Have a great day.